Okay, guys, give me a second. Give me a few minutes just to make sure everything's working. I'd really appreciate one of you guys to comment, to leave me a comment in the comment section on YouTube to make sure that you guys can hear me and that you can see the screen. If you cannot see the screen, let me know. I know you actually can't see the screen. Now you can. There we go. Okay, just let me know that you can see everything. There we go. Okay, so this is going to be part one. Let me just open up everything to make sure I see your comments, to open up the other screens. Hold on for a sec. Just hold on and we're going to get going. Until everybody comes in. So we'll wait 2 minutes and then we're going to get going. Let's hide this stuff here. Okay, good. Thanks, Paul. Now I see your comments. That's all that matters for me. We'll wait a few minutes for everybody to come in here and then we're going to get going. Let me just release the link with everybody else and we'll kickstart this session. Okay, so I'm recording this webinar in any case, so you guys are gonna get the recording once I edit it and remove the beginning part and blah blah blah, and then we're gonna start. Paul, can you just tell me if you can hear me well? Like, do you hear me clearly? Like everything's cool? For everybody else who's coming on, I see people are coming in. Just make sure to leave me a comment that you guys can hear. Okay, cool. Thank you. Okay, so I'm really excited about this session. In this session, I'm going to be providing you more information about my trading system. I'm going to be showing you how I earned a pretty nice and substantial amount last week on 3 different accounts, which I'm going to share with you one by one and show you everything and explain to you what you guys should be doing. Now, guys, very, very important. We're on the 16th of December. A whole new trading week begins. And by the way, that's the last full trading week before the Christmas holidays. The markets are going to be off and on, very low volatility and liquidity should be expected during the 24th, 25th, 26th of December. So this is our last week, and it's going to be a big one. We have a lot of things happening. Yeah, in short, we need to focus on making money. So we're going to have to apply the 1 day at a time, 1 trade at a time principle to this week, well, significantly, because there is going to be movement during the FOMC as things stand. And I'm going to show you this towards the end of the webinar. I believe that the dollar is going to be weakening a lot, and that's what I'm going to be trading. But remember, I am a reactive trader. You guys need to remember that. Reactive. That means that, sure, I expect XYZ to happen, but if ABC happens, I'll still look to make money because my only goal is to make money. Anyway, I'd like to welcome you all to this very nice little webinar, which is going to be a short guide to mastering the Pips Matter trading system. This is part 1. Remember that part 2 is on Wednesday, and it will begin 45 minutes before the FOMC. So we're going to be going over some education, and then we're going to be going over analysis, and then live trading. So let's get going. Now we're going to start with the introduction to the Pips Matter community. For any of you guys that don't know about it, I want to introduce it properly so you guys understand exactly what you're getting with this here. Before we go into this, I want to remind you that I've significantly lowered the prices. So it was $47 per month, and now we moved it to 75 euros per quarter, which adds up to 25 euros per quarter. But because we have a 30% discount for the first quarter, and that's only if you enroll until the end of this year, so until December 31st, you get a 30% discount, which makes it something like 18 euros some change, maybe less, a little, well, more or less 18 euros per month, which is good because of the quality information we provide. The trade ideas are rock solid. Of course, we lose some, we win some, but at the end of the day, we win more than we lose, and that's all that matters. Consistency is achieved in profitability. So, well, that's all that matters. Bada bing, bada boom. So let's go inside the community. Now, currently, we're, like I said, running this 30% discount. It ends on the 31st of December, but because I'll probably be drunk on the 31st of December, we're going to probably end it on the 1st of January. Anyway, what do you get in the community? You get trade alerts. So these are alerts that I take. So I'm only releasing trades that I actually take. I'm not going to see something happening in the market and send you guys a trade idea that I'm not putting my money on. So I put my money on these trades, and the accounts I'm about to show you have taken all of these trades and have, well, made money. You can see them losing money, of course, too, but because we have definite exit areas and we follow the complete system at all times, we actually make money. So trade alerts, actionable trade alerts, stop loss areas, profit areas. Then I explain why I'm entering the trades. Well, comprehensive information is provided about the trades. Then education. I never stop learning and I never stop teaching. I want everybody who works with me to be a constant learner, somebody who's constantly improving. Because guys, I don't know what jobs you all do. For all I know, you guys can be CEOs of major corporations or janitors in the school, and I don't care, and nobody should care about that. But for you to be good, great, or excellent at what you do, you really need to invest your time and be consistent with it. If anybody's read the book Compound Effect, I'm going to be using an analogy from this book in this webinar to explain to you just how powerful consistency is. So if you're just doing the right things, all you need to do is combine consistency plus time plus a solid, actionable system, and you're going to make money. You are going to make a lot of money. Next is watch lists. Now, watch lists are provided daily and weekly. So today's watch list is going to dictate the pace for the week. We're going to go over key trading levels on the weekly and the daily charts. So we're going to go over this and news. And then every day I release the daily watch list, which I go over the possible trade ideas by reviewing like 40-something pairs. And then I kind of narrow it down to about 5-6 possible trade ideas, find the weakest links and things like this. So you're provided with a comprehensive guide for the day. Next is guidance. Now, what's guidance? Guidance is Stoichkov has buy USD/JPY, and he tells me, Dennis, I'm going to buy USD/JPY. And what I do is I clearly analyze this pair comprehensively, not clearly, comprehensively. I analyze this pair and I check everything there is to it so I can help you make the right decision and guide you to achieve profitability on your trade. Now, I've done that very well with a couple of guys already. I just need more people to start interacting with me because I'm here to help and you need to use me and abuse me. Next is news trading. That's what we're doing on Wednesday. We're trading the FOMC live. I love combining price action and news because there is this big sharp moves in the markets which generate very quick pips. Now, I only advise anybody to trade the news with profits. I would never tell you trade the news with your actual balance because it's dangerous. So what we want to do is set aside a certain amount of a dollar value or even set up a new account just for news trading. Let me give you an example. You have $1,000 balance, okay? You trade with me, we get some trades out, blah, blah, blah. Things go well, you make 500 bucks. What we do is we take 250 bucks from that account and you open another account and you move the 250 into that account, and that account is just for news trading. And you focus on one specific trade idea, you have a definite exit area, and you risk about 50 to 100 bucks on that trade. When it comes to news, the markets move aggressively, and the fact is that I predict news very, very well. Not always, of course, but the win percentages are very high. So you can turn that 250 into a couple of thousand in just a month, maybe even less, just by news trading, because we're taking bigger risks, but we're also not touching our main balance. It's called structure. It's being organized. And of course, everything else that's going to make you profitable. Now, remember, 30% discount ends this month, but because I'm probably going to be having some fun on the 31st, I'm going to end this sometime in the late afternoon when I wake up on in the new year. But since the 1st is Tuesday and the markets, well, most of the exchanges are going to be closed, the 2nd of January is going to be our first trading day of the year, and we need to be fresh for this. So I expect some big things to be happening then. Anyway, we move on. That was the introduction. Guys, we're now moving into the system, and this is going to be important, and I need you to pay attention. For me, it's very important that you guys understand that what I'm doing actually works. And I've combined simplicity with consistency to achieve efficiency. So what I do is simple. I've been trading the markets for a long time. I was pretty good at it even from the beginning. Just the problem was the emotional side was very bad. Trade management side was very bad. Risk management side was very bad. I was just doing far too many mistakes. And just like everybody else, I lost a lot of money in the markets. The thing is, I always wanted to make this something that makes me money, because I've seen and heard stories and met people who make money, a lot of money in the markets, whether that's stock trading, and I mean trading here, not investing, trading, commodities trading, forex trading, options trading. I don't mean binary options, I mean actual options. And I said, you know what, man, this is what I want. This is what I want. So I invested all of my time into this. I kept going. I was going through hell with it. I would make a lot of money quickly, and then I'd lose it even quicker. And I said, God, I'm not just cut out for this, and I wanted to give up so many times. But I didn't. And the last few months have been the most profitable months trading-wise for me to date, because I've totally changed my system. I've enhanced it, not changed it. It's always the same. It just evolves. And I'm sure next year, this time, there's going to be something new. But the main idea is simplicity, consistency adds up to efficiency. And that's what we want. We want to keep things simple, and that's going to make things effective. So the system is pretty basic. Like I said, it's all about simplicity. The only things I focus on is key trading levels, that support and resistance areas. Remember, they are not prices. Pay attention to what I'm saying. This can really change your life here. Key trading levels are actual levels, and I'm going to show you all of this when we get to the charts. These are not prices. There is never a set price. It's an area, and sometimes the price won't be reached, but the area will always be reached, and I'm going to show you this. The next thing is patterns. This is what the system is made up of. Then some candlesticks, which are not that important, but they are important on the weekly and daily charts and monthly charts, of course. They're very important. But as we go down, they're not so important. Then the crown jewel of everything, contractions in the market when price contracts. Now, these are wedges, triangles, and things like this. But just to save ourselves the mental stuff, we'll just focus and call it contractions. The market contracts, it starts wide and it starts narrowing in, and that means it's preparing for a bigger move. Whether that's up or down, our analysis, confirms that. And I'm going to show you how I find take profits for day and swing trading in this webinar, and you're going to love it, and I really want you to start applying it. Obviously, no system without risk management. So risk management is the foundation that this is built on. Without proper risk management, we basically are building on sand, and you guys know very well that if you build anything on sand, eventually it's going to come crumbling down and fall. And that's how I used to build my trading system before. It was being built on sand. The common mistakes I would make is over trading, overexposure. There was a couple of more other things that I did, but generally it was over trading, overexposure. Oh yes, and of course taking huge risks, but that comes down to overexposure. So I was overactive. I'd get in the markets. The biggest mistakes I'd make, I'm sure you guys made them too. I'd take profit and then resell the market again. You know, I was selling, for example, Euro USD, and I'm like, okay, let me get the profits. I get out and I'm like, oh, it might go down a bit more, and I sell some more and it goes up, and I'm like, fuck. Sorry for swearing, but FUCK, that's exactly how you feel when that happens. So I created a 5-step formula, which I used from all the books I read, because I employ a lot of creativity to my work. I try to be very creative, use my imagination, you know. So I'm reading a book and I'm like, okay, can I apply this to trading? And I have. And this 5-step process is very, very basic. It basically goes over my problems, my weaknesses. And I do this with all of the people that I personally coach. I go over their weaknesses to understand the problems that keep them from achieving the goal. And guys, the goal is simple. For all of us, it's consistency. It's not making $1 million. It's not making 10 million or 100 grand or 50 grand or 5 grand. It's consistency. Because I've done the stuff where I make 20 grand in a day and then I lose 30 grand the next day. I've done that. You know, those big pushes in winnings is not what I want. I'd rather make weekly 3, 4, 5K, or better said, 5, 10, 20, 30%. And soon when I speak about compounding, you're going to understand the power of percentage gains. Because at the end of the day, it's not the dollar value, not how much you earn that matters. It's how much percent you earn. Okay? That's when the account and makes 10 gold. Hey, that's 10%. It's not the same account, right? So a percentage gain, base it on percentage gain, you're going to be able to kind of control what you're doing. And I'm going to show you how we're going to do this. At the end of everything, we're getting some cutouts here. If you guys at any point can't hear me, I'd like you to comment in the YouTube chat so I can make sure everything goes well, okay? So if you can't hear me, if I'm breaking up, if you can't see, make sure you leave a message right there. I'm looking at it on my other screen. And to wrap everything up, the whole trading system, we use rules, okay? And the rules, you know them. They're pretty simple. It's just 6 of them. There is one indicator that I use. Well, 2 indicators that I use. It's the Don't Chain Channel and the EMAs. But the last couple of weeks, or maybe about a month and a half, I've just been using one EMA because I'm focusing. Okay, cool, thanks. So yeah, I've been focusing only on using the 13-day moving average, and I'm going to explain to you guys why when we come to the section. And I'm actually going to make a blog post or maybe even a video of why I use this 13-day EMA. Excuse me, I had a lot of pizza recently. So I'm burping a little bit. Okay, let's go to the next one. So the trading rules, here they are, 6 of them. First is always check the upside and the downside of each trade idea. Now, this means that if you're looking, like for example, now I'm waiting for the dollar to weaken. I need to find reasons that it could go up as well. And this is very important because if you're wrong, okay, because you will be wrong, and when you are wrong, you're going to be able to capitalize on this. Because one of the main things here is to understand that being wrong is okay. It's okay to be wrong. It's okay to lose money. But staying wrong is a big ass fucking problem. And I'm sorry I'm swearing. It's Sunday. It's okay. I think we're all big boys. If you got kids around, put some headphones on because I might swear a bit more. Or if you don't have headphones, just leave from the room. Because I just can't control myself. Sometimes I do it. But I'm working on stopping. Maybe. So yeah, always check the upside and the downside because you will be wrong. And this is very important. This has saved my ass so many times. You will be wrong. You're going to make mistakes. Or maybe it's not going to be a mistake, but the market just doesn't take into account what's happened on the charts. Some news kicks in and it just starts tumbling down when you're buying. So what you can do is reverse your trade idea. and you turn a mistake into profit, winner. The way to do that is to buy. So you need to check both sides. Point rule number 2 is take it one trade at a time. You got to trade like a sniper. We need to, it counts. So when you're ready to, always here. They're always here. There's a new trade coming on. Tomorrow is a new day. I mean, even in the next 2 hours, something can happen in the markets that generates trade ideas. So we take it one trade at a time. There's no need to rush whatsoever. Rule number 3, you need to review the charts very well before entering. And what I mean about this is when we're doing our analysis every morning or every night or afternoon, whenever you're trading, you need to check different chart frames. Okay, that's number 1. You need to check different pairs. So if you want to buy Euro USD, a very sound approach to make sure that you do it right and make money on it is to check USD JPY, to check GBP USD, to check AUD USD, to check NZD USD. And if you see the dollar weakening on all of them, then you'll say, okay, so the dollar is going to be weak. But let's see about the euro, Euro GBP, Euro CHF, Euro AUD, Euro JPY, and you check them. You don't have to, and this takes like 7 minutes, guys. 7 minutes. If you can't invest 7 minutes into your analysis, then you really, really shouldn't be trading. Okay, trading is hard work. It requires hard work. And success in trading comes from doing hard work in terms of analysis, not the actual trading. The actual trading is opening a trade and just managing it, and that doesn't take any effort. The effort is in the analysis. You guys need to understand that. If you want to be a top performance in the sales industry, you got to make a shit ton of phone calls. You want to be the best programmer in your firm. What do you think you need to do? You're not born with some special ability to program. No, you're not. You need to learn. So you need to invest time into learning, coding, improving, thinking, creativity, all of these things. And that's how you get to improve and become good. Well, in trading, it comes down to analysis. So if we can base it on 100%, I'd say 80% of the effort is added to analysis and 20% is in the actual trading. Okay, maybe even less. Next, don't risk more than X amount per trade at once, not per trade, at once. For me, that's 7.5%. I never risk more than 7.5% of my total equity at one time. If that's on 10,000, that means $750 is the maximum I can lose at once. What I mean by this is if I have 2 trades open, my total risk cannot be more than 7.5% combined on both of these trades. Now, depending on your balance, depending on your risk tolerance, depending on the rewards you're seeking in that specific time, month, week, year, you need to base this on and you need to stick to this. When you achieve profits, you can play around with this because 7.5% on 10,000 is 750, but on 20,000 is 1.5K, right? So if I'm risking more, that means I'm earning more too. You need to remember that. That's why consistency is the goal, to achieve consistent profits and then continue growing your balance. As your balance grows, your risk can stay the same, but your rewards in terms of dollar value are increasing. Always have a definite stop out area. This is essential. You need to know when you're getting out, when you're wrong. You need to know. 6, ride your winners with hope, cut your losers with fear. There is a very good lesson about this in one of my courses, and I'm not going to waste more time speaking about this right now. So we're going over to the analysis and trade management. So this is very simple, and we're going to be going straight into the charts right now. Right after we're done with this, we're going to be moving on into the charts. Now, focus only on trading quality setups. This is very important because this explains that if there is nothing to trade, you trade nothing. Okay? I've seen it happen many times. People make profits and they want to be in the markets. It's an urge, it's a high, it's this adrenaline people are seeking, and they keep getting in trades. And that's the mistake I used to do. That's overactivity. I was always in a fucking trade. Monday to Friday, 24 fucking hours a day, I was in a trade, and that's why I lost money. Remember, one trade at a time, one day at a time, trade like a sniper. Focus only on quality setups, and we're going to be going over this in detail pretty soon. Taking profits on contractions. This is a very important technique I'm going to show you right now. 13-day EMA, This is for day and swing trading, and then we go to compounding. I'm going to pop out of this here, and we're going to go straight to the chart, and I'm going to show you what we're talking about here. So first of all, I'm going to start with taking profits on contractions. We're going to start with taking profits on contractions. What we're using here is the, what is it called? It's the TradingView. And I'm going to click up here. And I'm going to use the Fibonacci retracement, Fib retracement. And I'm going to show you something. So here is the US dollar index. This is the weekly chart. And as you can see, one sec, let's do this like this. So this is the weekly chart. And you can see a clear contraction of price. So we can even make it look a bit nicer if we go onto the daily chart. Check this out. There's a nice contraction. We have a fake out right here. Let me show you that. Got a fake out right there. Fake out, and you can see on the weekly chart it lines in right pretty just perfectly. So come on, one sec. So let's go over the contraction here. We can keep drawing them and drawing them and drawing them, and you know, nothing's going to work, but because the market keeps moving, we need to keep adapting with it. So what I'm going to do here with the Fibonacci is that I'm going to get the top levels here, and I'm going to go all the way down here. Now, the most important thing that you need to understand is that the target profits that we're setting, okay? I've just done this wrong, actually. So we're going to go from down to up. Okay, so the 50 has to be frisked. The 50 has to be frisked if we're going down. And this is the best way to take profits using contractions. This is the first target level, 50% from this move. But the only time we're going to make sure that we set the zero here is when we have a top. The top can come even a bit higher. Price action can keep moving. Maybe, just maybe, the contraction is happening based on the highs. You see, it could be happening here, so it could come up here. That means that our take profit can, you see, it moves. So that's why we react to the markets, okay? And this is how I set take profits. When I release you guys take profits on contractions, this is how I do it. And they always get hit, and I'm going to show you a couple of pairs that we released last week in the what's it called, in the trading room. And I'm going to show you how I created these take profits. And we're going to do a live analysis on a couple of pairs, and you're going to see exactly what I mean. But for now, do you have any questions? If you don't have a question, write no, so I don't have to wait too long. Okay, while you guys are typing your questions, if you've got any, what I'm going to do is I'm going to continue with this. But like I explained to you guys, this is how I set take profits on market contractions. Now I'm going to show you a trade that, okay, thanks. A trade that I released late on Friday. Okay, late on Friday I released a trade idea on Euro JPY buy, and I actually bought it, and I bought it real heavy on one account, and I'm going to show you what we're going to do here. So first things first, we're going to remove all drawing. I'm going to add my indicator in here, and that's the expo. There it is. Boom. Settings. I'm going to make it thicker. Blue. I'm going to make it, no, not histogram. Step lines. Inputs 13. Close. Okay, that's all I want to do, and I'm going to make it light blue because I just like it light blue. Boom. There we go. Dark blue. Sorry. Okay, so 13-day EMA. There is a contraction happening here, and you can clearly see it. Now, the biggest challenge that Euro JPY faces is that we have two directions. We have this up, which hasn't been broken, okay? So there's the low. Then we have the up here, okay? So normally, this contraction would indicate this contraction here. Look, let me make it black. This contraction here would indicate that on the breakout, we're going to go up and we're going to possibly target a new high. But how do we find the take profit on the daily? The same way that I just showed you. Okay, we're going to take this part and this part, and we're going to create this. Sorry, one sec. So the 50 has to be closer. So it's not that way, it's this way. Okay, so on the breakout, when a breakout happens, there are the two targets. So the first target is here, second target's here, third target's here, fourth target's here. Now, how do we understand what do we target? Oh, my mouse just fell down. So how do we understand what do we target? Based on the news that's moving the market. Because guys, remember, it's the fundamentals that drive price long-term and short-term. It's fundamentals, it's not technicals. Technicals help us get into the market. Now, you do not need to know how to read fundamentals. You just need to understand things. For example, if China starts having a recession, you guys need to understand that the Australian dollar is so connected to the Chinese economy that it's going to start tumbling down. So if I go right now to AUD USD, let's go to Euro AUD actually, Euro AUD, and we're on the daily chart now. Okay, so let's zoom out and you can see this. Okay, Euro AUD is in an uptrend, right? Look at this. Low, higher low, higher low, and Euro AUD is climbing upwards, right? It's going up. It's going up. This is an uptrend, clearly. Now, if China continues to have some kind of issues, whether that's with America or some kind of economical issues, Euro AUD continues going higher. So what I mean by this is, if this is a contraction, for example, it's not, but let's say it is, because there isn't one. But what we would be doing is we would be targeting the higher levels. So let's go back to Euro JPY, and let me explain to you Euro JPY. So you guys know what can affect the Japanese yen. For example, that tsunami that destroyed that power station last time, that weakened the yen significantly. So if something like that happens, price action is saying it's going to go up. Okay, so that's saying that something's going to happen with the euro that's going to strengthen the euro. And if we break out of here, we need to understand, why is the euro strengthening, or why is the JPY weakening? It's one of the two. Why is that happening? There must be a reason. There always is. It's not, nothing's random. Remember that. In the markets, there's no such a thing as random movement. So when that happens, you need to know what you're targeting, because these are big moves here, and you're going to know how to target these moves. So let's check out the price range from the breakout, which is this area here. This one here is 129 pips, 120 pips. The next move is about 185. The next one is 340, then 500, and then it keeps going and going and going. So you need to understand why and what you're targeting on the breakout. So the first one is clear. This is easy. I mean, this can be hit in one day. So you can see that the average daily move of Euro JPY, let me just check how much that is. The average daily move over the last couple of weeks on Euro JPY is 85 pips per day. Okay, that's the average move. So you can expect that this first target can be reached even if you start on the breakout. It can be reached in 1 or 2 days normally. Then the next one would take another day or two. Then this one would take about 2 weeks. Then this one would take about 4 weeks. So you need to understand the time frames of, based on average movement, what would happen. So if we look at contractions, and I'm going to show you, let's find something here. We're going to find a nice little contraction happening somewhere, and then we're going to be able to take understand what's happening with the price. Now, you can see, let me explain to you what the contraction is. Contraction starts wide, starts narrowing in, and narrowing in. If I go, and I'm going to clean this chart. If I go on the weekly here, you're going to see why this is a really good trade idea, this Euro JPY. So we can take the contraction from the downside, even from this low here. See this? Boom. And we're almost at the bottom of it. We're very, very close to the bottom of it. So you can do it like this as well. You see, so this could be a wider contraction, indicating that the price is actually going to go higher. Because price action since 2016 is moving up. Okay, we have low, and then higher low, and then higher low. Aside from here, when the contraction started being created, that is the only time we had higher, whatever, I forgot how to say it. But the main thing you need to pay attention to is what's happening here. So look at this. So we were going low. So you see lower low. Oh, one sec. Lower low, and then lower low, and then finally the third and final lower low. Now remember that pattern that I love to trade. 3 higher highs, 3 lower lows, there it is. 1, 2, 3. Then price comes all the way up here, kills this previous lower high from here. And now, if we stay in this area, if we do not come down here, that means that we're starting an uptrend. And that's why I said buy Euro JPY on Friday. And then if we go on the daily chart, we can see that price action is pretty much sticking within this area here. Now we have a contraction within a contraction, which is this one here that we were drawing already. Let's make it blue. I don't want to confuse you guys too much, but contractions are the most powerful things that I use in the markets, and they make me the most money. So what I'm expecting is Euro JPY to head higher based on this contraction and to continue an uptrend. Okay, this didn't take too long to understand or to check. Further to this, you can see that there is a possibility of a reversed. Okay, 1 second, like this. So if we go on the weekly, weekly, check out the weekly. So we have this long move down here, and this is a very strong bullish pin bar. Remember that we look at candlesticks. This is a clear, good, strong buy signal. But what we do have is the possibility of a reversed head and shoulders on the weekly chart right here. Okay? And that's within this contraction. Remember that. It is within the contraction. And that's why this now becomes a really, really, really possible strong trade. Furthermore, we are very close to the EMA, the 13-day, or here 13-week EMA, and here is the 13-day EMA. It's stuck within the price. So we're trying to break out, but we're not, but we're trying, we're not. And now I think that the next move should be higher on Euro JPY. So this could be a head and shoulders on the weekly. On the daily, there's nothing there because it comes right down here and creates a double bottom and then continues higher. That's it for this contraction. So what we're going to be doing is we're going to go over, so I went over the profit targets. I explained to you how they work. So let's go over the 4-hour chart. Let's go over the 4-hour chart. And let me show you something here. So let's clean up this chart. And I'm going to go more in depth and show you why we took this trade. Okay? So first, what we're going to do is we're going to see if there is a 30% support here. Okay, look at that. So there is room. Take the closing of price. Price action is closing around the 23.6, 30% level. To me, this is an important. Remember what I told you in the beginning. Key trading area, not price. Trading area. That's my reversal right there. We have a bullish reversal candle, 4-hour chart, strong selling, and we're adding ourselves up straight to those lines on the daily and weekly chart. Remember that. Now, if I go over to the 1-hour chart, and that's exactly what I did. So first we have the 30%, 20, whatever, key trading reversal area, and now we have a contraction that's being created. And even if I get the tops, it still says that it possibly broke out of it. Okay? It still says that it possibly broke out of it. Okay? So if we get the closing, I like to get the closing of price. This is how it looks like. And this is a bullish reversal pattern. We entered somewhere here, I think. Yeah, it was this candle. This is where I released the trade idea because I thought it was breaking out then. So as price continued to move lower, I continued to change this, but this looks like a bullish reversal. We are in the key trading reversal area, which is the 23.6 to 30, adds up beautifully here. And we have the weekly reason to go long, the daily reason to go long, the 4-hour reason to go long, and now we have the 1-hour reason to go long too. And this is why I said buy Euro JPY on Friday. This is why I took it. And if we go over to my FX book, I want to show you the two trading systems that I've added up there. Okay, while it's loading. So that's the clear idea here, and I hope you're understanding what I'm doing. For me, one of the most important things is contractions. Now, let's go over candlesticks, and we're only going to do that on the 4-hour, on the daily, and I'm going to explain them to you very well. So the first one that's very important is this here. This here, we have a double reversal candle. See that here, the green one, spike up, closed, small body, spike up, small body, goes down. This was an excellent selling signal. Now the problem is that we would have probably entered it on the next day. We would have probably been stopped out because it went all the way up, but normally we would want to set our stop loss above the previous day high, so we wouldn't have been stopped out, depending on where we entered, of course. And then you had 2 massive days of losses. But anyway, let's go over the trading systems here quickly. So this is this one. You can see that it has a 7% drawdown of the actual balance. It starts and never goes negative. Quick climb in just 3 days, 17%, and then it goes down to 5%. Then boom, spike up 47. Then it dropped. The equity dropped all the way down to 10.56% in profit. And then boom, 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 up again, then down, then up. It's normal. The balance kept growing, the profit kept growing. The biggest drawdown was 20 and 21%. And as you can see, that these are the days when it was already in profit. This is the 4th of December and 5th of December. So if we check 4th of December and 5th of December, here it is and here it is. The drawdown never exceeded the actual price. There it is, 10.6. Never exceeded the actual balance. It did exceed the balance invested at 7.24% when we started here. So yeah, that's one account. And then the other one is this one here. And I'm taking huge risks on this one. This one started with $1,000. You can see that the drawdown is obviously much higher, 25%. And the ROI in 2 days, yeah? 1, 2, 3 days of trading is 43%. The way I did this is just by taking the actual, you see there's 21 trades, that's a lot of trades. But what I'm doing is I'm really compounding them very aggressively. And I'm going to teach you guys how we're going to do compounding later on. Not so much right now. So yeah, let's talk about candlesticks quickly. The main ones that I look for is bullish and bearish pin bars. So let's start with pin bars. We look for pin bars. Here's one. This is a bullish pin bar right there. Okay, price went down, closed up. That was a bullish pin bar. So I'm not going to go over too many of them, but like I said, what we want to do is not trade them within price ranges. Like here, where price is stuck, we don't want to forget about it. We do it at highs or lows of a trading range. The high of a trading range is here, the low of a trading range is here, and then we have a lower high here and a higher low here. So the only places that we would trade pin bars or any other kind of candlesticks would be here, here for reversals to the upside, here for reversals to the downside. And that's it. The next one is long-tailed or short-tailed bearish bars. And this is one right here. This is a long-tailed bearish bar. Boom, right there. Price has a long tail, longer than its actual body. It's not a pin bar, it's a long-tailed bearish bar. And this is where you could sell. First of all, we have the trend line, right? We've got the trend line, which is connected here. It's connected really well. And it adds up right here. Perfect selling. Here we have a long-tailed bullish bar. Okay? The tail is longer, but price continued going lower. So clearly there was some kind of news and price continued moving. So that's, remember, long-tailed bars, this is how they look like. And we trade them at key trading levels, such as trend lines or key trading levels. Not randomly, not within price. We don't care about ranging markets. We care when it comes to a specific level. For example, like the 4-hour chart here. I know I said that on the 4-hour we don't really care about it that much, but in this case I do because it's at the 30% and it's giving me good reasons to go long now. More reasons to go long than to go short. So for candlesticks, This is the only two candlestick patterns I look for, single candlestick patterns. I'm going to show you now a double candlestick pattern that I just love trading, and I'm going to find it, and here it is. Let me show it to you. So price action makes it's going down and makes a low. This is the lowest it went. Okay, didn't go lower than this. The next day, it makes a new low here. You can see till there, and then it closes in the green. This is a double reversal candlestick pattern, and it is very important because it is a strong indicator of price action reversing. Okay, so, and you can see that there is a possibility of a contraction as well here with price action doing this. See, so you could have drawn this on this day, breakout happened here, and then we're using the 13-day EMA to buy. Price action comes down, tests it, clear indicator to buy. 13-day EMA, this is why I use it. I use it for the contractions. Remember that, guys. The 13-day EMA is used for price action contractions. When price action breaks out of a contraction, we buy when it retests the level, or add on to our trade when it retests the level. Now look at this again. Another contraction right here. See, contraction comes down, 13-day EMA, whoop, we go up. Further to this, is this the one? Further to this, look at this. So price action breaks out of this. On the daily, it retests the area. Here, we have another contraction with a fake out here. We tried to break out, but we didn't. Bullish flag, basically, but let's just call them contractions. Contraction, breakout, and we continue on. It's very simple. This is all I use, guys. This is how I release those signals to you that have made money for many of you. Contractions, guys. Contractions, key trading levels, a couple of tools. Simple and fucking effective. It's as simple as that. Anyway, the goal on this account is 300%. I have to earn this 300% like this week. I didn't have enough trading opportunities to actually earn on, and I think let me just see the profit, because I've got positions open on Euro JPY. If Euro JPY works out, 189, 101, and 347. So it's going to go up 100% in profit. So yeah, let's go over Euro JPY quickly and go over this trade idea that we released. So I told you 4-hour chart. I told you what's up. Yeah, 30%, 20% reversal, blah, blah, blah. Reversal candle here. Everything looks good. 1-hour chart, we got a nice little contraction breakout from the tops. We'll see if this is valid. But how are we going to base our take profits? You guys remember, right? We're going to take the top. We're going to come down to the bottom. And here are our take profits. First, second, third, fourth. There are our take profits. It's as simple as that. Now, if you, like for example, I'm going to be taking profit here or here, most likely here, because, well, that's on one account. That's on that $1,000 account that has 43% gain. I'm going to be taking profit at the first level, 128,505, more or less, because my positions are really big, and I don't want to be greedy because my positions are really big, so it's going to earn me a good and substantial amount. But normally the 61% is reached very quickly. Does anybody remember any of the trade? Yes, GBP USD. I released GBP USD to the trading community. Here it is. Okay, this is the actual analysis that was released to the trading community, and I'm going to show you this. There's the contraction. This is the 1-hour chart. It's a big mess here. You can see the green level, and this is wrong. So 1 second. So we're going to do this like this. No, like this. Boom, 61. You see the 61? It's right there. Price came to it, and that was the take profit. You can see the green levels right there as well. Price action came to it, broke out very quickly, and you can see this little contraction with the black. Let me just show you this by zooming in. So we had a little contraction here as well. Let's delete everything so you guys can see things better. And there is a contraction here. Price action came. There was a contraction. I was looking at the US dollar index. I was looking at everything else, GDP pairs, USD pairs, and I said, okay, now is the time to get into this. And then boom, boom, look at that. 1 hour, 2 hours, 3, 4 hours, guys. In 4 hours, good money was made. Now, how much money was made? Let's count that up in pips. So if you were to enter on the contraction to the 61% level, 115 pips in 4 hours. Now that is beautiful. So we've been going at it for 50 minutes. We're going to go back to this here, and we're going to continue with the presentation. So now, I explained to you bits and pieces. Now I'm actually recording a course, a new and final course on how to actually use this trading system. It's only about this, no specific trading education, because what I'm going to be doing is I'm going to be combining this course, which is a course of my trading system. So trading system course plus live real coaching. So I want to grow this community and teach you guys how to use this and teach you everything there is to know with the markets on an ongoing basis. So that's what I'm going to be doing with this. I'm already recording the videos, and in January we're going to be done. But because I can't afford to wait anymore for this, I need you guys from the community to know why, how I enter trades. Because for me, it is essential that you guys not only get crazy value for the money you're paying, which is peanuts, but also make a lot of money and become fully educated on the way I trade. The actual course for the system is going to run for a couple of hours. But it's something that I'm going to continue adding to. So it's continuously going to be improved. But I still want you guys knowing what the hell's going on. Anyway, compounding. Compounding is something I don't want to go over right now, but I'm going to go over a lesson of compounding. So it's about the compound effect. If you guys read the book, it's a really good book. And there is a scenario in that book. I changed it a little bit, but here it is. You've got two options. God comes to you and offers you a job, and he tells you, come work for me for 30 minutes a day, and this is option number one, and you focus on growing every week by 10%, and your weekly payment is $10 per week. And as you grow in knowledge with 10%, so does your earnings by week by $10. Option number two is that I pay you $5,000 for the same amount of time, but without improving your skills, and you get $5,000 every single week, but you work for me for 2 years. So here's the deal. Working, you work. Let me try and explain it again. Maybe you guys didn't get it. Maybe I didn't get it myself. But you work for 30 minutes a day. You have two options of payment. Either I pay you $10 every week, or $5,000 every week. But if I pay you $10 every week, it grows by 10% every week. So the deal is this. If you work for me for a month, you're going to get $51 on option number one and $5,000 on option number two. Every crazy person, nobody would be crazy enough to take the first option, right? If you don't think about it and you work the math. After 2 months, option number one, you would have been paid $126. On the other side, you would have gotten $10,000. All of your friends and your family would have called you a fucking idiot, would have told you to go and beg for the other option after 2 months of working. Imagine working for somebody for $235 while you're $126 while your friend or whoever took the other side of the job just made 10 grand and you got 126. That must feel like shit. But it's the law of compounding. After 3 months, option number one gets $235. Option number two has $15,000. After 12 months, after a year of grinding and learning and trying to improve and grow by 10% every week, you've only made $1,554. While on the other side, you're paid 60 grand a year. On the other side, you're guaranteed to make 120,000 in 2 years. After 16 months of doing this, compounding $10 plus 10% every week, only after 16 months do you surpass the second option? After 16 months, you have 86,762, whereas the other guy just has 80 grand. After 12 months, you got 1.27 million. No, after 12 months, you got 127,000. After 18 months, you got 1.8 million. After 24 months, you have 2.2 million. Well, the other guy just has 24. What is the point of this? I'm not saying to compound. I'm not only saying that you should be compounding your gains by using percentage-based goals, because they should be based on percentage, not dollar value. I don't care about you winning $1,000 a month or whatever, 10,000, whatever you want to earn. I want it to be in percentage, because in percentage it compounds. $1,000 is $1,000 this week, next week, next week. 10% this week, 10% next week, 10% in 15 months is a very big difference. That's how you need to base your goals in trading. Percentage gain. That's all that matters, because consistency will grow your account. Percentage gain will apply the law of compounding to you. Okay, I met many traders who tell me, oh, I want to earn $20,000 a month. And what's $20,000? You want to keep earning that? Inflation is going to eat you alive eventually. Okay, you're going to grow your goal to 40 or 50. But 20 is a small goal. I'd rather earn consistently 10% every single week than earn 5 grand every single week. Because no matter how small I start, in 24 months, in just 2 years, even if I start earning $51 this week, guys, you have what, 510 bucks. I'm very bad at math, but I think 10% of 500. Let me just see. 510. 1 sec. 10% of 521, 52. Yeah, that's right. So 510. So your balance is $510. Your goal is 10% earnings. If you earn 10% the first week, which is possible, it's 51 bucks. And you focus, sorry, that's in a month. 10% a month is $51. 126 after 2 months, 235 after 3 months, 1,554 after a year. It doesn't sound like much, and nobody's going to be impressed by what you're doing. But you keep it up. And in just 4 months, in 4 months' time, you're going to be at 86,000. So in 16 months' time since you started, in a year and a half, you're going to have $86,000 from 510. And in 24 months, which are going to pass anyway, you're going to have 2.2 million. That's compounding. That's the power of percentage gains. Whereas the other guy who says he's going to make 5,000 every week or month, he's only made 120 grand. You understand? So that's the power of compounding, and you guys got to start applying it to your trading. Listen, this is a mastermind group. I'm not here to make money. If I was here to make money from you guys, I'd be charging you 150, 200 bucks a month. Okay? I wouldn't charge you 25 euros a month. Simple. I'm not here to get rich. I just want serious people. I don't want some random dudes popping in here and just giving out their silly trade ideas. I've kicked out plenty of them already. What I'm telling you guys here is percentage gain goals. That's what you want to focus on, percentage gain. Because no matter how small you start, consistency and percentage gain, man, $51 turns into 2.2 million. Consistency. That's all we want. Weekly profits. Why do I say weekly profits? It's about consistency. I need to earn X amount of percent, and I need to keep growing that. So don't be discouraged if you have $600 to trade with or you have $60,000 to trade with. It doesn't matter. You apply consistency. You use my trading system. You focus. You ask me questions. You interact with me. I'm going to teach you how to do this because I'm doing it. And you guys can too. But I need you to talk to me. I mean, I get lost. You know, I do things. I'm busy. I'm here and there. So I can't go directly to you. So sometimes you need to come to me too. Anyway, let's move on. Let's go to the essential tips, and we're going to be ending this session in a bit. So I said in the beginning of the webinar, actually, you know what? Let's stop here. Do you guys have any questions? If you do not, just click no, so I know, so we don't waste any time. There is a small delay in the recording, So, yeah, if you hear me being a bit silent, it's because I'm waiting to see your guys' text. Thanks, Paul. Anyone else got any questions, guys? Okay, cool. Thank you. Okay, so I'm speaking with a lot of enthusiasm. I mean, that's me. That's how I am. I'm just enthusiastic about what I do because I love what I do, and I do it with passion, and I add a lot of hard work to it because I know that that's the way to achieve success. I mean, that's how I've been achieving success. So I'm going to try and put the tone down a little bit here and explain a little bit more about compounding before we move on. The basic idea is this: small, unsexy, but smart and consistent decisions equal big results. It's all about consistency, guys. It's all about profits, percentage gain. Remember that. Write it on your wall. Stick it on the wall in front of you on your trading station. Put it as a screensaver on your desktop. Percentage gain. It doesn't matter if you have $100 to trade with, a 600 or whatever. 10% a week is massive in 2 years. It's massive, massive. How do you achieve it? With correct position sizing. For example, whoever is trading here with an account that's from 400 to 500, your position sizes should be 0.04 to 0.06, not higher, not lower. If you move to the next bracket of 600 to 700, you increase it to 0.06 or 0.08. You stick within it, within those trading ranges, because that's going to allow you to keep growing the percentage gain. That's how I connected this. It's about connecting, being smart. I'm not smart, guys. I didn't finish school, man. I fucking stopped school. Maybe that's why I swear so much. But I stopped school at 12. Self-educated. Everything I know about trading, I learned myself. So what I'm teaching you guys here, you're not going to find anywhere else. Well, you're going to find it, but you're going to find it in many, 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 many different books. But when it comes to trading, contractions, all of this, it's me. Nobody's using the system that I use. Just one sec. I just had to write percentage gain and stick it on my wall here, which is full of stuff anyway. Okay, let's go to the essential tips. Now, being wrong is acceptable, but staying wrong is totally unacceptable. The idea with us being in trading is that when we're wrong, we want to reverse our trade idea. The only way to do that well is to review the upside and the downside. Now, I said a bit of position sizing. In one of the videos, I explained it, but I'm going to make a post about it. Let me just write that down. Post about position sizing. Okay, I'm going to make you guys a post about position sizing and how you can combine it with compounding. A little blog post, no big deal, just something that you guys can use. And I'm going to put a PDF in there that you guys can download so you can have it. Because you need to be structured, okay? You need to be organized when it comes to trading. You can't be random. Everything that you do has to be deliberate. There is no time for random stuff here. So when you trade, if I'm trading, look, I'm managing some accounts for people, okay? I do that as well because I want to help people out. I'm not even charging profit shares, at least not for the end of the year. I mean, it's Christmas after all. So I'm managing a couple of accounts here, and I'm doing really well. I mean, one account's achieved 100 and something % already in just over a month. The other account is at what, 40, whatever, 70 something % in less than 20 trading days, which is pretty good. And the way these accounts grow that way is, one, I apply the system at all times. Two, I use correct position sizing. Both accounts started with about 9,000 something. Well, one started with 10,000, the other one 9,985 or 850, something like this. So my position sizes, if I show you the history of the accounts, the lot sizes are 0.09, 0.9, 0.9. until I go to the next bracket. And when I came to the next bracket, which is 11,000 to 13,000, only then did I start trading with a higher lot size. And then when I came to the next lot size, I then increased it again. And by consistently increasing my lot sizes and following the system at all times, I can tell you that those accounts are going to be very, very quickly, very quickly over 20, 30, 40, 50K. One's over 20K already. But I can tell you in a couple of weeks, a couple of good trades, following the system, using position sizing, just doing what I do, those accounts are going to be very, very high. And I do that all the time. And I still have time, still have room to manage a few more accounts. 3 more accounts to be exact. So if anybody's interested, talk to me. Because I don't do more than 5 at once. Next, risk-reward ratios. Now I showed you the risk-reward settings. And I showed you the reward settings. How we set rewards on using the 60% level here. The 60%, the 50%. So you can see here, price came here, then boom, boom, boom. It went a little higher. So it's a trading range. It's a level. It came, I get out. I'm out. Why did I get out? Look, why would I want to stay inside this? There is a trading range here, which is acting as a resistance, right? So why in the world would I want to stay inside more than 60%? I got out. Market went a little bit higher. I stopped paying attention to it. What I do is this. Remove all drawing, okay? I never came back to the GBP to analyze it. But you remove all drawing and you come back. Now look at this. If we start analyzing this here, the first thing we want to do is take the top, take the bottom. Guess what we have? See this? And you see that, right? Now if we do this, we shall see a possibility of a nice little contraction happening right there. Low, lower low, lowest low. 1, 2, 3 in a row, right? Boom, boom, baby. Then what? What do we know now? So how do we find the take profit target? You guys know this. I just showed it to you. Profit target for Euro, for GBP USD is right there. The first profit target was achieved, 50%. Next profit target, next profit target, next profit target, depending on what the market's doing. Then you want to take the tops here. Check this out. Boom, boom. Okay? So where's your profit target? 50%, right? You're happy with 50% because it lines up with a possible resistance. Simple. You get out. If it breaks out, you continue to analyze. Where's your next profit target? It's here. Why would I want to enter? Find reasons to enter. Not just, oh my God, there's a profit target. Let me go get it. No, it doesn't work like that. Okay, so that's GBP USD. So risk reward. Now remember this. We want to be targeting, we want to risk, if you're risking $10, I need you guys to start targeting, for example, well, minimum 20. So 1 to 2 is the minimum. Okay, but ideally, what I want to see is you guys targeting 1 to 3. But I don't want you to stay in trades for days on end. I want you to stay in a trade for, if you can't do it properly, then you need to find a better entry. Then you really need to have patience. So 1, 2, 3, this was a really good entry right here. You get in, your stop loss is right below. Your stop loss is right below this level here, below this low. If you're entering here, doesn't matter, but your stop loss should be below this. If you're entering up here, your stop loss is below the next candle. Okay? Always below the next candle. You're entering here, then it's here. You're entering here, then it's here. Okay? Something like this. Very simple. Okay. Now again, it's written there. 1 day at a time, 1 trade at a time. That's how trading is, guys. We have a percentage gain we want to achieve, which is, for example, 10% a week, which is totally fine. Because no matter what size of an account you have, 10% a week in 2 years is millions of dollars. Millions. In 24 months, 10% is millions. if you're trading with $100, $1,000, or $10,000. 10% is insane. If you can do that every week, you're going to be a millionaire very quickly, or a billionaire. So, to end it, it's all about consistency. But when I say consistency, I mean in analysis and system application. Remember that. Consistency, not in gains. The gains, the profits, they're a side effect of the work we do. Never forget what I'm telling you right now. My profits significantly improved when I said to myself, you know what? When I worked at brokerages, I was the best one there. I earned Employee of the Year awards. I was the god. Everybody loved me. Everybody looked for me. Everybody wanted to hire me. Why did they do that? And I said, oh my God, well, I became the best at that industry because I worked my ass off. I knew things. I was devoted. I was spot on. I wasn't just there to get a paycheck. You hear what I'm saying? I didn't go there to get money from work. Money became the side effect, and I was making in huge commission checks because I went beyond the call of duty. I worked my ass off, and that's how I made money. So consistency in analysis, consistency application, hard work is in the analysis, not in the trading. Trading is easy. It's piss easy. Okay, we're at the end of part one. Before I go into anything else, I want to ask you guys if you've got any questions. While you're typing your questions or saying that you don't have any questions, I want to remind you that part two of this webinar will be held on the 19th of December, where we will be trading the FOMC live. We're going to start 45 minutes before the FOMC. It starts at 1900 hours, 7 p.m. GMT. So that means we begin at 6:15 GMT. An event will be created on the website. A link will be sent to you also. You can register so I can remind you. I'd love to see you all there. We can make a lot of money. Now, like I said, I'm creating you guys a course for all of this. I kind of put a lot of things in here. We didn't have too much time to go over everything. And I need to start prepping for the new week because it starts in a couple of hours. So I don't have time for more education right now. But I think that you guys got plenty of information here. Yeah, and that's it. Okay. Thank you all for attending. You've been super cool. And the recording of this webinar will be uploaded to the website later on. Now, keep in mind that I will be releasing the watch list in about an hour's time. I'm just gonna go and chill out a little bit here and start analyzing the markets in a few minutes, and everything will be added to the trading room. Thank you. Good day, good night, good morning, wherever you are in the world, and I'll see you in the markets. Okay, that's it. That's it. Okay, I'm gonna end it. We are done, ladies and gentlemen. You've been a super audience. Oh, Start Show. Very good question. Let me send that to you. Let me send that to you right now. I'm going to send it to you in the trading room. Okay. Thank you, guys. I'll message you all and see you later. Bye now.